You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
For me to sit there and give your new investors the list of the 100 ways they're going to scam the money from you that you will never figure out how they did it, it's better just to say, just invest in good people, proven people who've done things, who are good, decent, honest people, and are not there to steal your money, and you'll be fine. If you start going with the sketchier guys and believing their promotion, you know you're going to get jammed in the end, which is not a good thing, and they have hundreds of ways to jam you. So stick with good people, good companies, and you'll have a fighting chance.
Welcome back to Mining Stock Education. Thank you for tuning in. This is Bill Powers, your host. While I'm speaking again with returning guest, fund manager Warren Irwin. He has a Bachelor of Math from the University of Waterloo, an MBA from the University of Western Ontario. He's a chartered financial analyst, a mining, oil, and gas investor, and a fan of nuclear energy. His fund is Rossau Asset Management, which I believe in 2016 was one of the best performing hedge funds out there. If you're newer to this show, and I've been receiving several emails from newer investors that have gotten excited about the resource sector and are listening to this show now, please go back to an April 1st, 2018 episode I published. That was with Warren. That was at PDAC, which is a big mining conference in Toronto, 2018. And the title of that was Discerning Mining Stock Scams from Bre-X Until Today. And in that episode, Warren shares how he turned $250,000 of his own money into $5.6 million with the Bre-X scam. Of course, he didn't know it was a scam, but when he discerned it was a scam, he then shorted it and made money on the Bre-X fall. That was the biggest mining scam of the 90s. And this will be an eye-opening interview for those of you that are excited about making money in the mining shares, but may be a little naive as to some of the shadier things in the underbelly that this sector has. So with that preface, Warren, thank you for coming back on Mining Stock Education to educate my audience.
Oh, thanks, Bill. It's always nice to do a podcast with you and answer any questions you might have that you think some of your listeners might enjoy getting the answers to, because I try not to hold back to the best of my abilities and give you the straight goods rather than something that's all covered with fairy dust and is not the correct answer. So yeah, you're exactly right though. There's a lot of bad stuff going on in the mining business, and it's well ingrained. It's been going on for a long, long time, and it gets worse, of course, when things start to heat up. And what's interesting now is you're exactly right. I fully understand why you have more and more investors interested in learning about mining, because currently the way things are happening globally in the printing of money, when there is a rush to real assets, and you're starting to see a little bit of it now, mining is a great place to be, because you're buying the copper, you're buying the gold, you're buying all the other metals that are in the ground, and they're not being printed yet. The stuff you buy them with is being printed. So there's a strong tailwind that will really help the appreciation of these commodities over the next coming decade or so, because of all this the inflationary pressures because of the printing of money. But we'll see what happens. There's a couple other factors that could impact things like whether you get into the velocity of money and things like that. But generally in inflationary times, commodities aren't the worst place to be.
Well, Warren, I want to start off with picking your brain about pre-IPOs or companies that are looking to do an RTO to go public. Recently, I've been offered in the last month, 30 to 45 days, several pre-IPO financings, both from companies that just reached out to me or through my broker. So, and I also want to preface it by saying, for the retail investors that are listening to me, I have gotten some feedback that from just a few, not a lot, but that have said, Bill, why are you talking about private placements and accredited investor type things when most of us are not accredited investors? Well, because this is a venture industry and sector, you need to be aware of the dynamics of private placements and how companies go about raising money and some of the games that are played there, for you to understand the disadvantage that you have as a retail investor, and also so that you can just be aware of how the industry works, and perhaps one day you would be an accredited investor. So with that preface out there, Warren, when it comes to pre-IPO financings, when the company is seeking to raise $5 to $10 to $20 million, a junior miner that is, usually an exploration company, before they go public, as you know, there's many rounds of financing that occurred before there, often of fractions of what they're offering a major round pre-IPO. If you're offered a pre-IPO round, what are you looking for? What are some of the games that are played? What should we be aware of?
Well, Bill, there are so many games being played in that market. I can't even begin to first of all, I've been in the business a long time, and I frankly have not learned all the tricks. The guys out of Vancouver, mining stock promoters there are some real geniuses out there who know how to really, really put the boots to investors by getting in early, parking their shares in a whole bunch of different ways in which, so the typical investors will not know who they're really trading with. For instance, if let's assume you've got an honest mining company, and they'll want to make sure that some of the principals in the company get compensated for having set up the company and taken the risk and had their industry contacts used to help acquire some mining property. So it seems pretty reasonable that some of those guys get in at let's say a penny, half a penny, or whatever the number is, to make sure that they get a decent sized position, and that helps all investors at a later date by having some of the key principles with some cheap stock, right? So they're in the same camp as you. They've got cheap stock, but it's really because they put in a fair amount of sweat equity, use their contacts to get properties, things like that. But then on the promotional side, you'll get certain mining stock promoters that will put together a team. The team looks really good on paper. They'll promote the heck out of it, and they'll get a ton of really, really cheap paper. They'll sprinkle it around, whether it be family members, different offshore accounts, and then they'll start the promotion machine. They'll also sprinkle around some of this paper with, various newsletter writers and other promoters. And so everybody who's, in the business is all loaded up with paper, ready to start to promote. And then the promote starts, and then we have a really, really nice run, and then you'll start noticing a fair amount of papers coming at you, and that's often coming at you from the people who got in cheap and early. And so that's the dump part of the pump and dump scheme. So that's no less ethical company, but it's done both ethically and unethically, this seed stock thing. So
would it make it ethical that, like you said, they put up some significant sweat equity, use their context, and that therefore they can, be entitled to that cheap founder share?
Yeah, that's exactly right. You just have to look at, that's what I try and look at. I say, well, who has the cheap paper, and what did they do to get it, and did they really legitimately earn it? And I have no qualms of having a management team do that, because a lot of these guys, as they've been in the mining business, grinding it out for decades, and as they get older, let's say they're 50 or 60s, they probably haven't made a ton of money, because they've oftentimes worked for big mining companies, and this is their chance to take what they've learned from the decades of experience and all the decades and decades of analyzing properties, and take some of the best properties they've seen in their career, put them together, and make some money. And oftentimes they don't have the amount of capital you would need to buy a big position at 25 cents. So I think it's entirely appropriate for them to get a lot of early stage founder stock. But it kind of gets a little sketchier when you start sprinkling some of this founder stock amongst people who will promote your company, because one would hope that your company would do well on its merits, rather than having some scammers promoting your stock.
What about the escrow requirements on those cheap stock? Because if you, like you said, you issue your shares at less than a penny, you do a good promotion in that first year, the founders could be sitting on a 50 or 100-fold gain without creating any value for all the other shareholders. What type of escrow requirements would you want to see?
Escrow is an interesting one. I've been under escrow myself for buying early stage stock, and there are regulations regarding it. Escrow is an interesting thing, because generally when I'm under escrow, I hate it. And as soon as I have a chance to get off my paper, as soon as the escrow comes off, I just hit the market with all my paper, right? It's because I really don't like it. And so, to have a management team with, let's say, a 3-year escrow, I think is entirely appropriate, because not much is going to happen in 3 years' time. And I guess you have to watch, because there's just the concern I have is not necessarily with the management team, because generally they have escrow because everything's much more disclosed. It's really just the secret little promoters who have their paper that might be freely tradable, or they do some sort of really, they do some sort of swaps here or there to get freely traded paper that they could get out of in time. or they just sit on things for a year or two so that the promote's not happening until the escrow. If they know there's going to be a 6-month promote, they'll make sure that their escrow comes off probably in 3 months, so that they're, at least for the last 3 months of the promote or the pump, they're in a good shape to dump. So that's something you kind of have to watch. But a lot of this stuff is going on behind the scenes, and investors really do not have the level of disclosure that you need, because the people who are doing it illegitimately are way smarter than me when it comes to this, and I haven't figured out all their games. And there's some geniuses out there who really know how to promote and really know how to make lots and lots of money. My favorite ones is when you take a look at these promoters that are out there, and you never see a paper trail anywhere of them owning any shares, selling any shares, getting any seed stock. They're all doing it through shell companies, offshore companies, through their parents' stock account, through their wives' stock account, through everything. It's just they're pretty good at what they do, and it's tough to go against them, because myself and a typical investor does not know all the tricks that are involved in it.
And is there any way that you could actually research it? I mean, at most it seems like they get a slap on the hand, but for the average guy trying to figure this out, is there any way we could research it?
Yeah, what I do is if I feel I need to research it, I just don't even go and get involved, right? Like there's certain promotional groups out of Vancouver that I just stay a million miles away from, because they're playing all these tricks, and it doesn't matter if you know specifically which offshore company they're using or what they're doing, but you just know that it's happening behind the scenes. So I just stay away from those guys generally, because I know that I'll finish up second best. So I just generally try and stay away from that.
Another way a company can go public is through a reverse takeover, RTO. What are your thoughts on RTOs, and what should the average retail investor be watching for this?
Yeah, RTOs, I've been involved in a bunch of them. RTOs can be good and bad, right? Like one problem with an RTO, and RTO meaning reverse takeover, basically where a private company sort of vends its assets in to a small, usually a small public company that's already has the listing, already has shareholders, and they get a number of shares for vending in everything. So the benefits to that are that sometimes if you get a really good group that owns the shell company that was used, what you're able to do is get a whole bunch of great shareholders involved in the deal, which is really good. So if you have, let's say, the shell company being used has 30 to 50 shareholders, they're all sophisticated, they're all guys who have a small amount of money in the market, and they have a lot more money to follow up upon success of the project. Those are great shareholders to have. The risk of an RTO is, of course, if your shell is not clean, and there might be some liabilities in it or other bad things in it. I've heard friends of mine have done RTOs and were a little lax in doing the due diligence prior to, and then they did the RTO, vended their asset into this public company, and then found out that there was tons and tons of issues. So that's and they spent years and years cleaning that up. So that's not a good thing of RTO. So you just have to be careful. But most people generally get clean shells, and they RTOs go reasonably well. And the reason you'd go with an RTO is it's quicker and faster at times than just going the whole, grind it out through a prospectus route for a company. So that's sort of why reverse takeovers are done versus just going through the whole going public process right from scratch.
Warren, you're a chartered financial analyst, and when it comes to the financial statements of junior miners, pre-revenue junior miners, what would be the top 3 things that the average retail investor should look for in a financial statement to see if there's any shenanigans being played?
Oh, man, where do you start? I try not to spend a lot of time on the financials myself. I try and focus on more the geology and whether or not they're actually making progress on the project. And I generally only back people who are ruthlessly cheap when it comes to spending, and they are honest. So I don't really spend a lot of time going through all the expenses. As you know, there have been there's a poster child for this recently here. fission uranium, I think, has gotten some grief here recently. I don't know how it's going to turn out about some of their expenses and whether they were properly accounted for and things like that. But generally what I try and do is I try and avoid that right from the beginning. Again, if I feel that I have to go through the financial statements, which are generally, frankly, lousy disclosure, and look for expenses and how money's being spent and that sort of thing, I really shouldn't be invested in that company. I think of certain companies I'm involved in, and in general, these guys are total cheapskates, and they don't pay themselves a lot of money. They don't pay their staff a lot of money. They don't have huge expensive offices, and a lot of the money gets put in the ground, and their staff is generally remunerated more with options, and they'll take very small base salaries in there. So everybody's in there based on the success. I do get concerned when if I do see companies that are lifestyle companies. I remember once an example where a CEO was having an affair with his rather attractive CFO, and the CFO, if you went in and looked at the comp, she was being paid $750,000 a year, which is a pretty good amount of money for a CFO of a junior miner that's not in production, right? So you see stuff like that happen from time to time, and it's you try and stay away from it. Like I try and back people that wouldn't even do that nonsense in the first place, so that then I don't have to spend all my time looking at financial statements and finding out the way to try to scam the money out of the company. So I would rather just invest with people who are seriously out there to find a mine and not create a lifestyle company. We don't see quite as many lifestyle companies now, but a lifestyle company is, just for your readers that aren't, or listeners that aren't familiar with it, is basically a company where the whole purpose of it is to create a company which would raise enough money for the principals of it to extract their funds out of it to live a great lifestyle. I'll give you a couple examples. Back in the mid-90s, when there was a great run in the gold market, all gold companies had, like, if you had a listing, a property, and a public listing and a property, you generally had about 100 million market cap. And obviously all those companies, virtually all of them, went to zero. They were basically stripped of assets. They'd raise as much money as they could, and then over the next number of years, once the market turned, they'd start with a $10 million kitty, and then over the next 5 or 10 years, that money had long since been dissipated and generally into the hands of the principals and friends. So that's something we have to be cognizant of once this market gets a little more frenzied. And there's lots of abuse like that where you get these old retreads that are, they'll probably be former tech CEOs or former pot CEOs. Next thing you know, they're CEO of ABC Gold Company, and gold's trading at $3,000 an ounce, and everybody in the world is frenzied to get some exposure to a gold junior, and that's when this is very ripe for the picking, and that's when you have to be most concerned about lifestyle companies. I'll give you an example of a very recent lifestyle company. I won't name the name, but the individual is very well known in the mining business. So I had a buddy of mine went in there to try and clean up the mess, and the stuff that was found was incredible. For instance, the vehicles were being rented to the company. Like, for instance, a pickup truck was being rented to the company by a company associated with the CEO of the company, and he would rent it to the company by the hour. There was a charge of a rental of an ambulance, to keep on site as far as worker safety. Well, the ambulance consisted of a pickup truck with a cap on the back and a stretcher inside of it, and that was considered an ambulance, and that was being rented for a huge premium on a daily basis, again, from a company associated with the principal of the company. So these are, and another company I know that everybody's heard of, so their CEO the other day was laughing to a friend of mine about how he owns shares in the helicopter company that provides helicopter services to that mining company, right? So that's another way they're stripping assets out of the company. So this happens, all the time. For another example, kickbacks from drilling contractors on a per meter basis, X number of dollars. If they drill 1,000 meters, well, the head of exploration wants a kickback of X number of dollars per meter drilled. So there are more ways to scam investors in the mining business. It's truly incredible, the ingenuity some of these scamsters use. So I generally try and just stay away from those type of people to begin with. Both the type of promoters that are behind things. A lot of the promoters, if you start doing work on them, you'll find they have a shady past. Their past is shady. There's nothing going to change them going forward, trust me. And then with respect to management teams, the way they could strip money out of the company is incredible. And
it's hard to trace sometimes for the average guy, right?
Yeah, well, how would you and I know that the principal of the company is renting an ambulance to the company from his own private holding company? How would you know that he's renting vehicles to the company? How would you own that he has an equity stake in the helicopter company that's providing helicopter services to you, right? Because these are external private companies, and it happens all the time. And the more money that is at stake, and there is generally more money at stake when things are robust and vibrant, and that happens generally when we've got a very strong bid to the market. We're not in that frenzied state quite yet, but as we get to that frenzied state, that's when the real fun starts with all the scammers, and their ability to strip money out of a company is incredible. I remember the last maybe I guess the second last cycle back in the 90s, when that cycle collapsed in, let's say, 97, 98. I remember people coming up to me and say, Warren, you've got to buy this company. It has $5 million in cash, has a market cap of $2 million. And, Bill, on the surface of it, your investors might say, well, this is amazing. You're able to buy a company, market cap $2 million, $5 million in cash. The reality is, though, my response to them, which was a correct response because it's exactly what happened, $5 million in the hands or under control of a stock promoter is worth zero, because that's not your money. They view it as their money, and they will strip that $5 million out over the next few years. And that's exactly what happened after the collapse in the late 90s of the big gold boom then. And that's when that was a result of the big Bre-X blow up, contributed to that. But all these little juniors with $3, $5, $10 million over the next 5 years or so, all that money disappeared, and a fair amount of it ended up in the pockets of the guys behind the company.
Warren, I want you to share your thoughts, if you could, on insider buying and how Antiquated SEDI.ca is. That's where these insiders need to disclose when they buy or sell their shares, so that the average Joe like ourselves, at least myself, could be aware of if insiders are buying or selling. When I have a certain spending limit on my credit card, and when I purchase something online over a certain amount, I immediately get a notification on my phone that such and such was charged. Did I actually charge this? Why couldn't there be a system like that, where if an insider has to register with their broker, and whether they buy or sell their shares, people could be instantly notified? What's up with this multi-day allowance that they give them? And it's so hard to follow too. There are some services, but this website is so antiquated.
Yeah, so I guess I'm not the only one that has a really tough time making any use out of SEDI. Yeah, it's a really tough site to follow. It's a tough site to understand, and you're right, disclosure is delayed. I don't necessarily mind the disclosure delay that much, really. My biggest concern, like SEDI is antiquated, like you said, and it should be improved. Add that to the list, and of things that need to be done in the Canadian securities markets. So it's not super great. Generally what I find is there, if you go to CEO.ca or some of the other websites like that, you'll find that some diligent investor has gone through and gone through the SEDI filings and has tried to figure out exactly what's going on. Because as you know, sometimes you have no idea what they're doing, and it's confusing, especially when they do, if they exercise stock options, then they sell. And For a neophyte investor to make heads or tails of a SEDI filings can be tricky, and especially when you mix in options and things like that. The other thing too about that's difficult to really glean anything from an insider trading report or SEDI filings and things like that is that a lot of these companies, they have tremendous amount of blackout periods. So somebody will say, "Oh man, I saw 3 insiders selling their stock here yesterday. We got to jump in and sell." I say, "Well, were you aware that they were under blackout for the last 3 months?" And so there are so many other factors that could impact the buying or selling of shares by these insiders. And if you're saying, well, listen, this company has great fundamentals, the insiders aren't buying, why is that the case? Well, maybe they're not aware that those insiders are actually talking to a major corporation and is going through due diligence and possibly buying the company. So they can't be seen as they're under blackout and they can't go out and buy the company. So that's a cautionary tale of reading too much into insider buying and selling. My biggest concern really is where some of these more dodgy individuals and promoters have got shares tucked away where they don't even bother filing SEDI anyways. So I'm in the market, so I hear that, oh, XYZ promoter just made $100 million on a big pot deal or whatever company, right? And you'd go through their filings, you would never see the person trading at all. Yet they were the people that set up the company, and they were the ones that are behind it. And there's not a single filing of them trading the stock. So that's my biggest concern with respect to that. So again, it all comes back to the key thing. Shady promoters are shady promoters. They're always shady. You could generally Google their names. You'll know the groups out of Vancouver that are bad. They're bad in the past. They're bad now. They'll be bad in the future. So just stay away from those people.
That's excellent advice, Warren. And I want to be respectful of your time. You've given us 30 minutes of mentorship here. So thank you very much. As we conclude, any final thoughts, or will that about do it?
Well, hopefully that's of some use to some of your listeners. I've been burned by pretty much every one of these scams in one way or another, and that's how I learn. So stay tuned for my next book, which will be when I retire from this business. I will sit down with some of my friends and we'll write a book of all the scams. But I've already started notes on the book, and I'll tell you, I've already got a book written pretty much. And for me to sit there and give your new investors the list of the 100 ways they're going to scam the money from you that you will never figure out how they did it. It's better just to say, like we said, if there's one takeaway here, just invest in good people, proven people who've done things, who are good, decent, honest people, and are not there to steal your money, and you'll be fine. If you start going with the sketchier guys and believing their promotion, you're going to get jammed in the end, which is not a good thing. And they have hundreds of ways to jam you. So stick with good people, good companies, and you'll have a fighting chance.
Excellent. Thank you for coming on today's show, Warren. Much appreciated.
You're welcome, Bill. Have a great day. Cheers.